What's up everybody, Tom here with another video, and in today's video we're discussing everything together for the stock markets, crypto markets and commodities markets. There's been a lot of opportunity this week so far with some great buying opportunities in certain markets, but don't worry, there's plenty of new opportunities arising for 2022. So sit back and relax because we have plenty of things to talk about right now. See you soon. Okay, well, here begins our market recap for the 22nd of December 2021. And when we're talking about markets, we have to go to the stock market straight away. It's the biggest in the world. Look at Tesla, 7.5% up on the session. It went all the way to $1,000. We saw some strength in the buying around the 900 support, which we knew was a key level, and it was off to the races. 7.5%. This stock is phenomenal when it gets fired up. Google, 2%, Microsoft, Apple, all the tech technically was doing well. And when we move over to the actual stock market indices, you will notice that they went up and they really held up all the way into the close. Another strong day of the big guys buying it. Maybe they want to get big pay packets for the end of the year. Remember, we're about to finish the calendar year in the US and they're pushing this market near all-time peaks, probably trying to get as much healthy bonus as possible. Nasdaq 1.21%, S&P 500 1%, IWM and the Dow Jones, they were all up. Let's move over to the sectors, and the sector that actually was leading was XLY. Now that's mostly because of things like Tesla, but we also had technology, XLK, SMH, which is semiconductors, all doing well. Healthcare did well. And the only sector that was a little bit underneath was biotech, but that had some strong performance in previous sessions. And biotech's actually one of the areas that I think will be very interesting and we've been looking at as a community for 2022. We'll be doing a special video on the weekend about some of our thoughts for 2022. So make sure to subscribe and of course smash that like button if you enjoy our content so far. So a lot of people are talking about Santa rally this, Santa rally that. It's really been the discussion of December, and most people were convinced that Santa had left the building. And fair enough, it was all up and down and whipsawy depending on which area you were in the markets. But remember, the Santa rally theoretically is actually from that point after Christmas to realistically the new year. And these are the stats taking back for the seasonality all the way back to 1999. So you'll notice that there is a seasonality there. Is it something you would trade off by itself? No. But when the technicals come around and they also agree with it, it can be something of interest. And we'll look at the S&P 500 later on today's video to really pinpoint some key levels where Santa might go back to the North Pole and why we may reach those zones. I think you guys will really enjoy that. Let's move over to the VIX. This is the fear index as many people see it on the markets. And basically the VIX here has moved it back under 20. Now that's a great sign for traders and investors in some ways because it means the volatility is coming out of the market. It's good if you're a bull and bad if you're a bear. If you're a bear, you want increased volatility. It usually lends to dumping and selling off, but the VIX came right back down. And interestingly enough, this led to some pretty nice moves on a few different things, including commodities. So gold, does this now become the discussion here all the way through to, I guess you would say, maybe January, because gold is starting to bounce back up. Now it's looked weak for days and days and days. We'll have a look at that in a second, but we know that 1810, we've been watching this. We have this line here for a reason. And if we get an 1810, 1812 kind of breakout zone, we're going to be very confident that gold is breaching a key resistance area. And that is leading on to some potential extra movement. We also kind of warned against this idea that even though this looked super bearish, you had a rejection, and a rejection, 3 candles in a row of weakness, that gold may buck that trend just due to the fact that it was in a tough zone. Look at all these things. You've got moving averages, the red line, the blue line, the green line. They're all sitting in the same area. And then all of a sudden it breaches above. This all becomes dynamic support, and it's going to be very tough for the market to get underneath these areas. So gold's doing quite well. Another one that's doing amazingly is silver. And silver could be precursoring here gold's movement over the next couple of days because silver broke through our fabled 2260 area. This is a zone that we've been watching for what seems like months, but pretty much hasn't been. It's just since the start of December. And we've seen it reject once, twice, 3 times, 4 times, and finally put an 8 hour above. So the market might come back down, but you would think there's going to be buyers around this 2260. And this is a fairly large kind of thing that's happened here on silver. Some people are calling it an inverse head and shoulders with the left shoulder, head, and right shoulder. It doesn't really matter whether you look at it from a pattern perspective or whatever you want to check with it. But what is important is it's above some key moving averages, it's broken through the key resistance, and it could be an early precursor for something like gold to be moving as well. Another one, US oil. Continues to be a really fantastic trade here. Now, it did have some worrying signs during this day of the FOMC statement last week, but it instantly reversed that, got back above that 69.40, and when that day trade came through, it pretty much led towards our belief that we could move towards that 73. We're now through the daily 20 moving average, which you'll notice this red line here. We've closed above that, and we're at the $73 a barrel. And if you go down to something like a 2 hour, you guys don't need to be probably informed if you've been watching the channel for the last couple of weeks, how many times this level has rejected. So do we expect some sell-off here? Of course, you usually do. But if it closes above this level, where's the next stop? Arguably about 75. Could be a nice day trade in there or a scalp in there, depending on your systems. Then the next movement could be towards that 78. So this is really where oil can ramp up. It's put in a nice base. The story is pretty consistent. It's found base, reached a level, come back down, bounced to it, faked out, and then moved up. So your breach and further strength could be on the cards for black gold here in terms of what's moving into the end of 2021, 2022. Let's go into stocks, talk about those. We've got Tesla. Look at it, $1,008 in the post here. Oh, actually, that's in the close, $1,003 in the post. So it does get through the $1,000. It's still kind of floating around a key zone. Let's think about some of the early warning signs that we had this. And we discussed the idea that it was breaching yesterday in the previous video. We had that bullish hammer. We got the breach of the downward trend, and it just came out of the gates incredibly quickly. I think Tesla's one of those ones where if you see a significant closure and you see the right type of price action, you've almost got to take it in the close, because the gaps on this stock can be extreme. And a lot of people say, well, what about closing the gaps? Yeah, some gaps do get closed, some do not. Like a gap here never actually closed. The gap here now has closed, and it can take some time with Tesla. I tend to find like it's kind of like a horse out of the gates. Sometimes it just keeps it going. It doesn't actually stop. So 1,000, big level. I don't know if I'd consider it a crack of that zone yet, but this opens up so many trading opportunities moving forward, like a bit more of a ramp, maybe hit like 1,040, come back down, test the 1,000 from the top down, and allow plenty of day traders and scalpers to get into those opportunities towards maybe the 1,100, the 1,200, some key resistances on the left-hand side. Even this 1,080, you're going to need to be watching in the small time frames, and that's really what Tesla's about right now. If you purchased it at 900 potentially for investment, fair enough. But Tesla could be stuck in a bit of a range, and that's just due to what we've seen in the past. While it's going to be highly volatile, when we've seen big runs, we've seen some increased sideways action after that, and we've seen a big run, and we've just got high volatility sideways. And it's partially because Elon Musk has been selling his units. I believe he's almost done with that, or has finished with it. That might bring sentiment back, but a lot of it's just going to come down to earnings and speculation, which is around 42 days away, by the way, with earnings. Let's move over to Apple. What's going on there? Well, it's bounced off the daily 20. We knew this was a pretty important zone. It's been stronger than you would think, but not necessarily on high volume. Apple is a tough one because by a lot of metrics, it's getting expensive. And Apple is one that I do pay attention to. It tends to find some type of not super unrealistic price based on the fundamentals. It has been growing like a serious growth stock since the pandemic. It's done very well, and we don't have any reasons to really be super scared of it just yet. But I'm not sure whether these prices are for me on Apple at this stage. When we take a look at the charts, look, it's been bouncing. It obviously made a decision here, and you've got a few extra days of bounce. It could move up to the resistance, but I will think that this area up here will act as resistance. And there's a few reasons why, mostly because where the S&P 500 will be if Apple does end up getting back to 180. So we'll look at that a little bit later in today's video. ARK, this is doing okay, I guess you would say. ARK okay. Didn't go up, and considering their biggest holding is Tesla, pretty surprising, yeah? That's because these hyper stocks are still suffering. A lot of the fund in Cathie Wood is not doing well. I mean, 2021 will definitely go down as a bad year for her. The worst year I think she's probably suffered since she began the fund itself. But when we think about Arcade, lots of volume coming through, bases within bases. We do have the chance of a big double bottom to occur into 2022. And if that occurs and we breach through that zone, it could be all on for a lot of these hyper stocks. So this is certainly one of them. But I think the other one that really comes to question is something like ARKG, the genomic space. We've talked about biotech. She obviously does have a biotech-based fund. And if you look at it, we've got the resistance across the board. And this is the same as like IBB or any of those other biotech sectors. If you think about it, where they are, they're all at resistance or just breaching through it. So big bases being formed, important closures coming up for some of these, and certainly some interesting stock opportunities in the market. And a lot of people say, well, you know, the market's overpriced, there's no opportunities. Go and look at some of these hypers. What was really scary was what was happening in February of 2021, where we had companies that literally make zero money at all being valued at sometimes 2 or 3 times where they are now. So this is actually a much more reasonable market than it was back in February, if you think about it from that perspective. Let's move over to IWM. Well, IWM shows that tail, really. This is the 2000 bottom end shares, so the smaller ones. And you'll notice here that it's actually done nothing really for all of 2021. We had the support being found around that 212 to 210 area. It's bounced off that really nicely. And you know, I really like what we're seeing here on IWM. I know I've mentioned it a few times, but this is the first sign of true recovery in this market. We have the bullish hammer. We've got it coming out, leaping out of the gates, having another decent session, going up to, of course, the daily 20, which it pretty much closed on. And you can just really see it now, can't you? It moves through, comes back down, finds base support around that 220, hits 226, a big resistance for it. And if it gets through there, happy days. And IWM really could be looking much, much better in only a few weeks. This has also got one of the bigger percentage gains that it can put on while the rest of the market will do its thing. It's got 3% to 226. And then if it goes back to previous highs, even just previous highs is 11%. So will this be the market that most people are going to be looking at over the next couple of months? If hyper stocks do end up catching accumulation bases and start to bounce, like ARK and obviously the stocks that are held within that type of fund, then we could be seeing a bit of a resurgence in the Russell 2000. So it's a scary market. Don't get me wrong. The Russell 2000 isn't easy to trade and it is highly volatile for an index, but it's starting to improve. Let's move over to the other index. We've got, of course, the Nasdaq here. Really strong base formation. I guess we pretty much guessed that it would find some form of buying pressure, but again, volume has been down in these buying. Now, that's not unusual for this time of year. We do see a sharp drop off ahead of Christmas and then after Christmas for volume, so don't read too much into volume at this stage. But we do have a strong resistance coming up. That's 400 on the QQQ, and the Nasdaq has a corresponding level. This level is resistance. If we keep going up and we smash into that, which I think is probably what the market is going to try to do, then expect some selling pressure off that area. And if we breach through, well, it could literally at that point be the Santa rally. So Nasdaq's doing some nice stuff here on the daily. And when we go down through the time frames, you'll notice it's aggressive, but there should be buyer momentum. Even if it comes back to some of these key zones, such as 383, you'd think there's buyers, and 400, obviously some sellers will come through. The market of interest, though, has got to be the S&P 500. And boy, oh boy, did we trap this well at the start of the week. We did the live stream. It double bottomed here on the smaller time frame into our massive trend line here. And we actually have, for the first time in a long time, a bit of an ascending channel here on the S&P 500, which is cool because it gives us potential profit targets, potential sell-off levels. I love it when markets are in ascending channels. Why not? It's so much easier if they're holding to these things. And remember, this one over here, this line at the top, is the community trend line. It's your guys' line. This is what we've used for so many months now to really show peaking markets. And again, it might be used very soon. So let me show you how that's going to happen. So one of the things about the S&P 500 is it's bounced through every single one of its problems. 4600, smaller time frame, slammed through it, moved straight to the 4664. Found this area straight through 4696. Next level for it's around that 4715, and you would think there's some selling pressure there. And the reason why is because look at the daily. Every single time it's hit this daily, it's had some problems. But this time could be different. Santa could be coming to town. He breaches through 4715. He brings in Rudolph. He brings in every other one of those things that I don't remember what they're called. You guys can let me know what they're called in the comments down below. Comet, I think that was one of them. I don't remember the other reindeer. But it closes above, then we pull back, and then where's the next logical step? Could it be 4800-ish? Why? Monthly R2, also top of the trend line. So let's say the Christmas Santa rally comes through with a massive bulldozer and pushes through. 4800 seems like a very key zone. R2 pivot and our massive trend line. And then if we do end up seeing selling next year, where could possibly be another nice pullback to? Well, would it be the bottom? Would it be our trend line? Certainly an open area. And this is what's cool about TA. We can start to now trap the S&P 500, figure out where the bulls, where the bears have full control. We know that the bears come seldomly, and when they get in, they go fast, but they haven't been able to really smash levels down. I think for 2022, you're looking all over every single time. This weekly 20 moving average, it's key to where you pick that big correction. When people are saying crash this, crash that, really it's going to be about the weekly 20. You close below the weekly 20, let's get in that big correction that we all kind of want, that 10 to 15%, maybe even 20% in the market. That can only occur though once you get through this 20, and that's the big line between the bulls and the bears. And that's why it pays to be optimistic on the markets. It's paid in 2021 again, it's paid in 2020. Will it pay in 2022? That's the question we'll all be asking. And I'll talk about this a little bit more in our weekend video. So let's move over to Bitcoin. Now, Bitcoin, little disappointing. Frankly, it should have already found some rally. So if you look here, this is where we were talking about wanting to close above. It's not doing it. Why is it not doing it? It's lazy. There's Bitcoin traders, they're lazy. They're not pushing it up enough. So we tried several times. We are not getting a closure above. There are plenty of signs in other cryptos that things are improving. But at the same time, if Bitcoin can't come along with it, that's not good. Some people will point to the daily 20 being an issue here as well, because it did sell off that zone last time. And that's kind of similar when you think about it to what happened previously. It's kind of a bit of a downward slope here, bunch of rejections off the 20, and then it just fell off a cliff. I hope that doesn't happen. It's kind of do or die over the next couple of days. We really want to see a Christmas cheer come back into the Bitcoin market, get above here, get us to the 52K. And once we breach the 52K, that will be happy days, because I think that's where a lot of people will stop listening to maybe the FUD. They'll get a bit more excited and crypto will come back to life. So hopefully that happens. Now, I mentioned before, there's plenty of coins that are starting to show the signs of recovery. So one of those is ADA. However, we look at this is Cardano. And if you take a look at Cardano, it's got a really nice base. It's got a really good descending triangle on it, and it's breached past that point. So it's not even a question that it's done the first stage of recovery. The problem is it's only the first stage. If you notice here, 20 moving average again, it's finding problems on the daily time frame. It's very similar to Bitcoin. They're looking good. They're seeing that turnaround, but they haven't quite done the final step before a lot more people get confident in it. And I think you start to see Wall Street also jumping in, because remember, they are in the crypto markets now. It's not 2015 or 14 anymore. They're in the crypto markets in a big way. And unfortunately, with that comes manipulation that they're bringing in as well. And I think we're starting to see that manifest here. BTC shorts is not the issue. And if anyone that's thinking of that, maybe it's the big whales kind of dumping Bitcoin, I wouldn't say so. We haven't seen a rise in this like we did previously during that weekend crash. And Bitcoin shorts have just continued to stabilize and move back down. So it's not really probably going to be that one. So I have a bit of an announcement, and that announcement is, well, firstly, I want to say very Merry Christmas to you and all of your families around the world, and thank you so much for your support in 2021. We will be taking a small break here on YouTube for the next 2 weeks. We'll still release some videos, but it won't be at the same pace that we usually do them, where we do every day of the week really for the markets. Now, in 2022, we have some amazing things thanks to your feedback. I will be putting some polls out there as well. If you can answer those polls, it'll be very helpful over the break, just to let us know some of the content that you would like to see. Even post the content in the comments down below, and we'll take some of that feedback on board. But look, what we've achieved together in 2021 is amazing. I would love to see 2022 bring us the 100K subscribers. That's a bit of my own accomplishment if we can get there, because I feel like that's an amazing accomplishment for anyone to do. And the community that we've built throughout the year of live streaming, throughout the year of videos, has been absolutely phenomenal. So from me and everyone at the team at FX Evolution, I would just like to say thank you so much for watching. We appreciate your support. Subscribe if you want to. Of course, smash that like button, and I hope you all have a fantastic holiday break. I know that I'll be really looking forward to it, so I can come back refreshed and kick some ass in the markets next year, yeah? See you, everybody. Bye for now.